We do something a little bit different here at the Intentional Trader, and so a lot of what Alfonso was talking about actually applies. A lot of it applies to what we do. We just do the other part of it, and we do it much more quickly. So we end up. I see somebody says I can barely hear you. Is that the case for everybody, or do I need to turn up? You're good? Okay. All right. So we do something a little bit different. We're not swing traders, we're day traders. And so we do spend a lot of time working at being professional day traders. And we've developed a system that helps people find the higher probability pullback trade. You heard Alfonso talking about the waiting for the pullback to be over and then getting in to continue. We found that it's a lot more efficient to wait for the pause in the trend or in the push and then exploit the inevitable pullback. All right, so we've been doing this for quite some time. I started out as a remodeling contractor. Of course, I got bitten by the trading bug like most people, and decided that that was going to be a lot easier way to make a living. It would just take me a couple of months to learn how to trade, and then I could quit that job that I had for so many years, and it took me 20 years to reach that level of income. And since then, I managed to turn things around. Something really big kind of happened. And so I've been a professional trader for over 9 years now, turned into an educator and a trading system developer, and we trade on NinjaTrader platform. Although a lot of people that don't use NinjaTrader still do use our indicators and our trading system, because NinjaTrader is a free platform to use for charting. You can certainly place your trades on other platforms and chart with NinjaTrader for free. So we develop everything for NinjaTrader that we do. All right, so when you look at a chart like this, what does it seem? Does it seem to make more sense to be trading trends for a larger target, or would it seem to make more sense to find those pullbacks inside of those trends and trade for numerous targets rather than riding through with just and try to hit a single target? A lot of traders today, it's a tough question to answer until you can determine how you think about trading. A lot of traders today are still doing it the old way and are trying to read what the big boys are going to do over a longer period of time, basically like watching the ticker tape, when the fact is the reality of the modern markets has changed dramatically. The supercomputers are now what the big boys are doing, what the market makers are doing, and what they're using. They're using that. You've heard of the HFTs and the quants and the hedge funds and all those guys that have all the money. They tend to be able to afford these supercomputers and to be able to put them into the exchanges so that they get the data faster, or they can manipulate the data faster than any of us could possibly imagine. So our mission is to figure out, when is this manipulation happening? And the thing is you got to ask yourself, why are they manipulating? Well, they're manipulating the markets because they know how we're going to react. And we react the same way every single time, because it's all about supply and demand, just like Alfonso was talking about. It's all about supply and demand. And they manipulate the supply to create the demand and vice versa. All right, now I'm going to ask you for a few minutes. You probably already know a lot about trading or investing, and maybe thinking about learning about trading, and you You hear a lot of the same things over and over again, and you think a lot of the same things over and over again, and you kind of get stuck in a rut because we're looking at trading from a single perspective, and we come into trading with this perspective, and we have the hardest time understanding that trading may not be what it is that we're actually seeing. Okay. For example, if I were to walk to the right here, I'm just going down, 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 down. And eventually we start going, well, that's just the way it is. I don't understand it, but that's just how it is. Because this is how we come into trading with that kind of mindset. So if you allow yourself to change your perspective just a little bit, the picture becomes a lot more obvious. And that's what I'm going to talk to you about today. I'm just kind of hoping that you keep an open mind that, yeah, there's that ugly chart. Unfortunately, the charts look ugly a lot like this, right? Why do single lot traders or small lot traders struggle? Conventional wisdom tells us all, you know, we've all heard it if you've been out there, if you've been trading, or you've been, excuse me, reading about trading, learning about trading. The first thing you learn is the trend is your friend, and you need to try to follow the trend. Unfortunately, when I was trying to learn how to trade and I did this, I found out that the trend is actually an emotional roller coaster. And I was a little guy. I could only trade single lot contracts or at least very small lot contracts. And I was unable to manage my emotions, to be an adult about my emotions when it came to trading. The money seemed to cloud my judgment all the time. And nobody told me, when they just keep saying you got to manage your emotions, nobody told me that it's nearly impossible for single contract or small lot traders to ride that emotional roller coaster, okay? If you're not scaling, okay? Well, many of us that are struggling can't afford to trade a whole bunch of contracts and then scale, all right? Statistics say that you're not going to ever succeed in overcoming your emotions. Statistically speaking, when you're being told, you know, manage your emotions, manage the trade according to your plan, you don't have to, you know, you just need to sit on your hands and wait until the trade hits your target or your stop, okay? That's one of the most difficult things for us to do because it revolves around money, okay? So I came to this realization that I need to stop trying to do something that I know I'm not capable of. I have proven over 7 years that I am incapable of managing my emotions and taking a very small trade and managing it to make a decent profit. Yet I tried and tried and tried. I finally decided I'm not doing that anymore. You know, I'm sitting here trying to figure out what's going to happen in the markets, yet I know that these big guys are out there manipulating the markets, and they can't, they're going to manipulate it anytime they want, and there's not a darn thing I can do about it, okay? So you feel a little bit helpless, right? So the days of being able to count on the big moves for small lot traders are over because these guys are out there. Now, we can't outsmart them, or we can't outwit them, we can't outtrade them, but they're there all the time. So what can we do? You know, you want to try to ride it out over the long term. If that works for you, great. It didn't work for me. My emotions got the better of me, and I had to find another way. All right, so here's the first step of what I did. Step one, I started small, and what I was looking for was consistency. And when I say small, I mean I'm a single lot trader. I was just a little guy. Start small. After blowing out many trading accounts, I had to start with a small trading account again. But my mission became becoming a consistently winning trader. Okay, I just wanted to end the day as a winner and start small doing it that way and see if I could learn how to be a winning trader and see if I could actually develop something where I could win more days than I lost. Okay, because when I was going on the long trends, I would have huge winning days followed by huge losing days and no consistency at all. Okay, so I decided step one, start small, be consistent. Step two, stay small, be consistent. So what I'm thinking of here is a whole paradigm shift, right? And with these big guys in the markets controlling the markets all the time, the whole idea of getting in and out quickly started to make a lot more sense to me, because then I'm not open to these manipulations. I'm not supposed to just ride them out over time. If I can get in and out quickly and do it with very few contracts, but do it quickly and build consistency, then over time all I do is just add a little bit to that, to my trade. Okay, so we're looking at a basic paradigm shift in trading, and this is all brought on with technology. All right, so again, I'm asking you to kind of take a different perspective on trading. I decided what I needed to do was learn this and do this the way that I learn or become skilled at any other skill in my life. Look for small daily improvements. All right, so that's when I started thinking small. So I look at a chart like this, and my thought was, okay, I just want a sweet spot. I want an edge. If I could just find an exploitable edge, then I would have the means to end the day as a winning trader. Not a lot. I'm not talking about winning a lot, because I never could even get any traction as a winner. So I started looking at wherever I could on a chart and say, okay, where is there something on this chart where I might be able to take advantage of something? So the first thing that I noticed was these areas where price was moving really hard and fast. And then for what appears to be no apparent reason, it would stop and turn, at least a little bit. So I started thinking, well, what if, if I could just figure out what's going on in those bars before price stops and turns, maybe that'll give me a heads up that price is about to stop and turn. So I studied everything I could about these big bars right here. These bars, after a major push, you have a big push like this where price is going up, 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 and then you get this big up thrust and this pullback, and then price is going up, a big up thrust, and then a pullback. Okay, so I started looking at these pullbacks, and as I started studying what was going on just before the pullback, I certainly noticed a whole lot of confluence of events. There is not a single event creates these pullbacks, or at least gives us a heads up to these pullbacks. Now, you may have noticed there's a number of other indicators in our example, number of indicators in our example here. This is a confluence. What this is telling us is that there are multiple sources of data suggesting the same thing, meaning that they're coming from different different areas, whether I'm reading volume, or I'm reading order flow, or I'm reading divergence, or I'm reading the tape, whatever. They're all suggesting the same thing. Okay, so why do we trade these pullbacks? Why do they give us such an edge? Well, they're very predictable. They give us extremely precise points of entry. There's no gray area. I'm going to show you in a few minutes an exact point of entry that you just can't miss. There's really no difficult chart patterns to try to decipher and learn. It's real easy to design trade rules around it. The great thing is it's generally ignored by most retail traders as potential. Alfonso had a really good point, and for trading, the swing trading, this may not be the best thing for swing trading. We don't do swing trading, but all of the small pullbacks, and then price would continue. It happens in every trend for various reasons, but it always happens. Price gets exhausted. Price pulls back and rests, again, for various reasons. Generally, it's because traders are taking profits or getting stopped out. And then it pulls back a little bit, and then off it goes again. Well, the little pullbacks are generally something that people just try to endure, and that this is when the emotions start coming back in, and they start worrying that the pullbacks are a reversal, and price may be going against them. All right, so, but we actually look at those as a positive sign, okay? So there's other advantages. There's a much smaller drawdown potential. The limited market exposure, you know, the longer you're in a trade, the more speculative that trade becomes, because you don't know what these guys are going to be doing, what these market makers are going to be doing, and therefore it's a much less stressful type of trading. And it's easily quantifiable with the confluence of indicators, meaning that the more indicators you have, the higher the probability that you're going to get the pullback. Now, some people say, well, you don't need indicators to trade. And I certainly could probably do these trading without indicators. After many, many years of doing this, I probably could, because I have a lot of experience. But I also have a lot of experience in construction, like building houses. And, you know, if push came to shove and somebody told me I had to build a house with a hammer and a handsaw, I bet I could do it. I know I could do it, especially after all the years of working at it. But I don't think I would if I had the ability to use tools to help me not only get done more quickly, but get it done much more efficiently. All right, so that's why we like to use technical indicators for our trades. All right, so what is a pullback trade? And we call it bunt trading. This is a very typical trade setup for us. It happens all the time. It happened today in the trade room. I don't think we've produced a video yet, but we are going to have a video coming out where I actually took 2 trades at the same time, which doesn't happen very often, but it did this morning. So it looks a lot like this. Now, this is what we call our Rockstar trade setup, and it was given to us. We didn't create the Rockstar name. It actually was given that name in the trade room, because as soon as we got all this confluence, it just seems like it's going to go in your favor, and so it just got the nickname Rockstar, and we just recently changed it over to Rockstar. It used to be called a Speed Flash, so now it's a Rockstar trade setup. So what do we see here? What we're seeing is order flow analysis when we see this little white arrow here. This little white arrow tells us that the orders that are being processed through the market right now are likely being manipulated, because they're coming in at a rate that is unlikely that retail traders can trade that fast, and because we don't have the ability to trade that fast. Like you said, we're just little blips on the radar, on the screen. They hardly know we exist, as far as us being able to make any noise in the markets, but doesn't mean they're not out there trying to take our money. So we're looking at order flow analysis. We're looking at volume thread analysis. We're looking at divergence. We're looking at momentum and velocity. All of these things come together and give us the high probability of a setup. Exhaustion is the very first thing that I'm looking for before I pull the trigger on a trade. Now, We just introduced a brand new indicator that does most of that for us. So you can remove almost all of those indicators, and we now just introduced our new Rockstar indicator. So we're actually giving you the ability to combine different parameters of each of those indicators inside a single indicator to generate a signal for you. So what we're looking at inside this one indicator is the processed order flow, suggesting that price is currently being manipulated, and that would be on this bar, okay? This bar, price was apparently being manipulated. Price exhaustion is setting in due to an oversold condition, which is not printed on here on the screen anywhere, but it's inside this indicator, all right? So we do have potential for exhaustion, and we know this bar is likely manipulated. We also know what happens after, or generally happens after price has been manipulated and we're in an oversold condition. Price is getting weak here. Time for that pullback, okay? But that's not all we need. The next thing we need is to find out if momentum has changed directions. Even though price is dropping, has momentum shifted the other way? Okay, that's called divergence. If we have those three conditions in place and the right parameters selected inside the indicator, we now have a Rockstar trade setup. And all we do is we print that star on the open of this bar. It doesn't print when the bar closes and the next bar opens. The very first tick that comes in prints this this symbol here, okay? And I'll show you that. Actually, I won't show you the Rockstar. The Rockstar, we're just now, this is the first time I've talked about it in public. Excuse me. The Rockstar isn't technically available yet. It will be available after January. We have a group of people called the VIPs, and they'll be the ones to get it first, and then it'll be made public after that. So that's our Rockstar setup. Now, it's all the same thing. What you're seeing here on this chart is also a Rockstar setup, but not in the Rockstar indicator, okay? So we're looking at timing, right? We want things to be really simple. We want things to be right there in front of your face. We have what's called our heads-up display indicators, meaning you don't have to look anywhere else for information. Everything you need to make a trade decision is right here. We don't need any other time frames. We don't need any other windows. We don't need any other market analyzers. We don't need anything. We don't need to watch TV. We don't need to read the news. We don't need any of that. Everything, all of that information is right here inside these indicators, telling us to anticipate this pullback right here. Do we know if it's going to be a big pullback or a small pullback? Nope. But we know with a high degree of probability that it is going to pull back. All right, so that's where we trade it. And I trade for a quick in, get my little piece, get out, wait for the next setup. So I'm ready to take it, okay? Now, some people, you may be looking at this going, oh my goodness, there's a lot of things on the chart there. That's just too many indicators. It's too hard to read and understand. It's actually really, really easy. Well, what about the false signals? I hear that all the time. People that don't know a lot about trading, if they're expecting indicators to do the trading for them, they call these, anything that isn't a winning trade, a false signal. There's no such thing. These are signaling when a condition exists. Therefore, you don't always need to concern yourself with every single condition that exists. So we now have, oh, I'm sorry, I was about to switch slides. The entry for this trade setup was right here on the open of this bar. We had a big push. We had what we call a speed tick, which tells us that this bar is being manipulated. We have our volume spread analysis and a ricochet indicator. One is reading volume spread analysis. That's our pullback alert, that dot in the back, which we'll talk about another time. And if you want to learn more about volume spread analysis and how our pullback indicator works. We do have a video for that. So if you'll go down here to the bottom and you want to see that video and learn more about it, just send us an email and we'll send you a link to that video. It's actually one of the top rated videos on YouTube, I think, for volume spread analysis. So my point of entry was at the open of this bar because I had exhaustion potential, major line of resistance. This bar opened with a divergent signal suggesting even though price is moving up, the momentum is going the other way. So that's where I entered. Now, with our new indicator, it would just look like this. So pretty simple, straightforward. That's our Rockstar indicator that has the Rockstar trade setup in it. So we have done a bit to remove some of the indicators using the Rockstar if you so choose to use the Rockstar. I probably will put it on the trade room charts, but I've been using the other indicators for so long, it's really simple for me to use all of the other indicators instead of combining them into one. But a lot of people have requested this single indicator. So we put all the parameters for 3 different indicators into one. So that's how that works. So if you think it was complicated and there's too many indicators, think about this for a second. What are you looking at here? You know, we all know how to drive, right? You're really looking at indicators that help you to make decisions about your driving. And if you can do this, you can simply understand our little trading system, our very powerful yet simple trading system. All right, so from left to right, we'll look at this and we'll go, okay, over here we're looking at the potential for exhaustion. That's our OBOS indicator, our overbought, oversold indicator, that potential for exhaustion. So maybe for a car, you're just glancing at your gas gauge, all right? Or you're looking at, or you're reading RPMs, right? Or flow of orders, or the speed of orders going through. That's our speed tick indicator. Or, you know, you're looking at your GPS and you're making sure there's nothing that's, you know, going to hinder traffic, or that the traffic flow isn't going against you. Or, you know, there's indicators that you use while you're driving all the time, but you're not thinking about it constantly and becoming confused. It's after a short period of time, you use all these indicators to help you make a good decision about driving and about what you're going to do next. And that's simply all we do. Let me show you the indicators in action. These are our bunt trades, okay? These are bunt trades in action here. So I'm going to just show, one thing I want you to notice is when the indicators print. They print in real time on the current bar. These are very high performance indicators. So what we're looking at here is a strong momentum drop. That's these dark colored bars, and they're turning gray. And then we have the strong potential for exhaustion because of this oversold condition. We don't put other indicators below at the bottom of our charts. We put the indicator right where our eyes are. That's our heads up display indicators. All right, but there's no setup there because we didn't have any support behind our trade. This time we did. We had momentum. We had both of these bars are being manipulated by the big boys, the market makers. Price is dropping, yet it's exhausted, and they're manipulating it here. They can only be manipulating it for one reason. They want to cause a reaction. That reaction is not likely going to be a major push if it's already been pushing, okay? So we've got this push down, oversold, manipulated. The next bar opened, we have 2 divergent signals, 2 different signals suggesting that momentum is headed the other way. Even though price is going this way, momentum has already shifted this way. When you combine all of that, my entry, and you notice when this printed on the open of that bar, my entry is right here, right? And off it goes. Same thing here. This one doesn't have the divergence signal with it, but it's still what we call a speed tick trade setup. Same thing here. So you see it over and over and over again. Strong push, bars being manipulated. We have our volume spread analysis indicator suggesting that the buyers and sellers got in a fight here, and the sellers were already tired, but they kept fighting, and then the fresh buyers were just waiting down here for them, and then they jump in. We have a divergence signal on the open. Notice on the open of that bar is when that printed, and off it goes. Off it goes. Okay, so that's what a bunt trade looks like. So let's real quick. I'm going to go through real quick indicators 101. Some of you that don't know indicators or that use indicators and really think the indicators are supposed to do the work for you. Trading indicators, right? They're nothing more than tools to make your job as a trader easier. They do not do your job for you. Okay? These are all tools to use, right? They don't do anything unless you know and you learn how to use them. All right? Particularly if you combine them together to do a job. All right? So what do we do with indicators? Well, we put them on a chart, obviously, right? That makes sense. So what's a chart? A chart is nothing more than a graphical representation of what people or institutions are thinking about the price of something at a particular point in time. And that's it. They're only graphical representations of thoughts, feelings, and emotions. That's it. Don't try to make something more out of what a trading chart is. Okay, and the best indicators are going to be the easy ones to read. They're going to help you understand the information that the markets are giving us. Okay, that's really all they're for. Better to help us make decisions with, to understand what's likely to happen next. Market indicators don't tell you what to do next. They simply help us read what our competition next move is likely to be. And if we can anticipate that correctly, that's our edge. And fortunately, we have a really strong edge. And we have the best indicators in the industry. They help, first of all, they help you to build confidence, because you're going to, remember I said I just wanted to start teaching myself that I could be a winning trader. And that's what I did with these small wins. So you start building confidence. Then you start doing it more consistently. You become conditioned to being a winning trader. And then the next thing you know, you start building profits in your trading account. And you want to build them very slowly. I had some great big profits when I was first learning how to trade, or the first 7 years. Man, I might be up for, which for me might have been, you know, $12,000, $15,000, thinking, oh, I got this. I'm up 50. I am now making a living at trading. And within a month, I had lost all that and then some. And I was right back where I started, never seemed to gain any traction. So that's why I decided to start out small and keep it small, and just keep doing the same thing over and over and over again. So we've taken the best of the technical analysis out there, and rather than try to trade one of them, we just combine them into a single trading system. Okay, so we use a lot of divergence, and that's when since I got to kind of hurry up here. For those of you that don't know about divergence, we also have a video that I've done on divergence that, again, send us an email, and right down here at the bottom of every slide is our email address, and learn a lot more about divergence. But basically, divergence is when price and momentum get out of sync. All right, so you'll notice they're moving in opposite directions. They diverge. It's very common that they run in the same direction. All right, that's when things are running the most normally. Another example of divergence. You know, swing highs and swing lows. Okay. Now, we can look at price, and we can look at this momentum oscillator. And if you eyeball it, can you pick up where divergence is? And this is typically how you read divergence in trading. You put a momentum oscillator and you put price, and you hope that you see the divergence to help you enter a trade. Divergence is very powerful, and it will work for almost any market, any time frame. The problem is it's difficult to use. We've made it a whole lot easier to use. You're going to look here, and your eyes are going to follow this along, and you're going to say, okay, well, that looks about the same. Then we have a drop here and a drop here. Okay, they're running together, and then we got this little hump. We're running sideways, drop, popping up here. Everything looks about the same, right? So there's no real divergence going on here. So yeah, no divergence there. Price is dropping on price. Momentum is dropping. Everything looks about right. Wait a minute. Hold on there. Price is dropping. We're setting a lower low, but the momentum is setting a higher low. So we have a divergent condition. Look what happens when we have that divergent condition. Price wants to catch up with momentum. Price will stop and turn at that point. Remember, I told you I was looking at all of those charts where something sudden and unexpected seemed to happen and turn price around. Divergence is one of those things, and you can see it before price reacts. This is very important. When momentum turns before price, price will typically follow. All right. Now, order flow analysis, or actually processed order analysis. That's what we spend a lot of time doing using our speed tick. And we do that because we want to know when the big boys are manipulating the markets, right? That's been the same way since the beginning of trading. Everybody wants to know when the big boys are trading. Well, we want to know when they're trading because they're doing it for a specific reason. Their manipulations are done a certain way over and over and over again. And if we, because of the regulations that they're under, they can try to hide what they're doing, but regulations don't allow them to hide everything. But they still try to disguise their movement so they can sneak up on us and take our money, right? Now, if we know what they're doing and when they're doing it, they can't hide. We can find them, okay? Very easy to find them using time and sales if you know what you're looking at. So what we're looking for is an unnatural move in price that has orders being processed really, really fast, okay? That's saying that those processed orders are happening really fast, and it's likely by some supercomputer that's inside the exchanges, okay? It's unlikely that us little guys could place orders that fast. Not only that, but we're measuring the volume of the ticks, and they're not very, it's generally, we're going to find out that they're going to do it on lower volume, but they're going to process them very quickly. When we do that, we know it's likely the big boys. All right. So basically, I've got this histogram down here that I created, and it works like a speedometer, right? So we just extrapolate the speed of the orders coming through over a period of time, and so it's kind of like saying that at the speed that they were coming in was like at 60 miles an hour. Okay, and at 60 miles an hour, usually if it's going that fast, retail traders can't trade that fast. Retail traders are going to be trading down in here. Only the big boys can trade beyond the 60 miles an hour. And when that happens, typically price stops and turns. Okay? Now, it's very important. There's more trading charts that are very common trading charts. All right, very common in the industry to see trading charts like this. Each one of these trading charts has one trade setup on it. What do you have to do to figure out one stinking little stupid profitable trade? I mean, you can sure paint yourself in a corner with stuff like this. So do we have confluence, meaning that lots of indicators suggesting the same thing? Let's just say we do. Is it easy to see and read? Absolutely not. So I decided we're going to wipe the slate clean when I started creating these indicators, and everything was going to be right in my face. And the whole idea was fighter pilots were the first ones to have these heads-up display because their target is right out there in front of them. That's what they need to be looking at. That's where they need to be looking and not taking their eyes away from their target, okay? Not having to scan around for information. Everything they need is right there. So that's basically the way we do it with our indicators. So if you look at the chart on the right, you'll see a whole bunch of indicators, including a time and sales window on a chart, and then you look at the chart on the left and you see our indicators and some support and resistance. And these are the exact same charts with the exact same information. All of the information in here is the information that you see here, okay? So we've taken it's really easy to make trading complicated, to make charts difficult to read and difficult to use. It's really hard to come up with a system that only gives you the information that you need when you need it and doesn't put any extra information to help confuse you on the charts. We remove all of the superfluous information, okay? So is there confluence? Heck yeah. Is it easy to see and read? Heck yeah. All right, so we've got 10 different indicators suggesting that something's about to happen here, okay? We have the momentum indicator. We didn't get to talk about that much today. That's these bars that go from black to gray to white. Why do we use that? We don't get a whole lot of white bars. What we do know about momentum and about strong pushes like that is they never continue for very long. Okay, there's always a point of exhaustion. These big pushes never continue. They will always stop at some point, and they could reverse, or more likely it's just going to be a bit of a pullback, and then they're going to continue. Right? So the pullback is so much more predictable than the continuation, because I don't know whether this is going to be a small pullback and a continuation or it's going to be a full-on reversal. That information is not contained here. The information that is contained right in here is the fact that we're going to have a pullback. This is the sweet spot. This is what I get good at. This is what I do every day, over and over and over again. The more money that goes into my trading account, the more contracts I add to this same trade setup, and I become the best in the world at this particular setup. I don't have to manage my emotions. I don't have to try to trade like a machine. I don't have to do any trade analysis. Basically, it is as exciting as sitting and waiting on a bus. So we've got momentum. So we know exhaustion is setting in. We have an overbought condition, another source of exhaustion. We have our speed tick indicator suggesting that this bar is manipulated, and the big boys are manipulating it, and they're doing it for a reason. And look at our volume spread analysis webinar, and I explain the whole thing. Our ricochet indicator, which is a derivative of the speed tick, suggesting that the acceleration was very fast, not just the overall speed, but the acceleration. Our pullback alert indicator, suggesting that lots of buyers involved in this part of the bar. And as we started getting up in here, the sellers that were laying in wait were waiting right up in here. Now the buyers are like buying like crazy, and the sellers jump in. And now we've got this churning of buying and selling. But the fresh sellers that have just been sitting up here waiting start beating up on the buyers that are getting a bit exhausted. That's the very basics of what this indicator is saying. So we can expect a pullback. This bar opens, we have divergence. Two different divergence signals suggesting that the momentum has shifted directions. And we have our velocity, a couple other indicators that we didn't have time to go over today. Basically our support and resistance. So what makes more sense? You said this was an ugly chart. That was the only comment that I saw. I'll have to go back through comments here in a little while. The whole thing, if you're trying to enter a trade here and you're trying to hit a profit target here, how much emotions do you have to go through to get to here, from here to here? Is it going to go straight to target? Not likely. Well, sure would be nice if trading worked out that way. Not likely. So what makes more sense in today's markets? How about we find the edge? Find an edge. Find those places where something is likely to happen. It doesn't have to be big. You just have to find it and get good at it. And we found it with our bunt trading. Okay, we do have a special offer for you guys. All of our pullback indicators that we talked about today, and then some other indicators that we didn't get a chance to talk about today. Plus, we've got a fast forward program. We're going, and by the way, these indicators, it's a one-time purchase. There's no lease or anything, or no annual renewal or anything like that. You buy it once and you own it, and you get all the updates for free. In fact, all our NinjaTrader 7 indicator owners got upgraded to NinjaTrader 8 indicators recently. We have a what we call our fast forward training program that there's something that a lot of traders don't know or understand, and that is that trading is a skill, and you don't learn a skill by just showing up for the games. You actually learn a skill by going to practice every day and doing the hard work and knowing how to do the hard work and having tools to do the hard work with. This is what we've developed with the fast forward program. We can accelerate your learning curve dramatically with the fast forward program. So we're going to throw in a month of the trade room. We're going to throw in a one-on-one session with me and remote installation and one free month of our fast something. It's supposed to say fast forward program. That got messed up. Oh, look at that. It said forward self-directed trader. Oh, that line was supposed to be down here. Okay, one free month of our fast forward self-directed trader training program. And 1 month in the trade room. Sorry about that. The slide got messed up. Anyway, if you go to the specials page, it's all written up there. All right, how am I doing? I gotta. Oh, it's for lifetime? Oh, that's even better. My apologies. Lisa corrected me. This is not for one free month. This is for. Let's see if I can fix that. Can I fix that? This is for life, Lisa. Lisa does all the specials for us. She really pulled out the stops this time. So let's see. Now let's see if it does it right. Lifetime of our fast. There you go. So we're going to make it pretty easy, especially with that fast forward special. I thought it was just a month. She's giving it to you for a lifetime. So I'm looking to see if we have any questions here. I'm not real good at using GoToWebinar, so I'm not sure about the questions. How come I can't see the questions? I say show. I have a tiny little box, Renee, for questions.
You can click on the little like box with an arrow on the left to questions, and it'll pop out all the questions, so you can make it bigger.
It still just shows questions in a tiny little box. Let's see if I can drag this up. There we go. Oh boy. Okay, so we already have asked and answered. Are there anybody waiting for answers? I think Lisa probably got most of them. Well, shoot. I'm having a hard time seeing all the questions. I apologize. I see a lot of questions, but I'm not sure if they've been answered yet. So if you're waiting on an answer, how about you just ask another question and maybe I'll see it as it rolls in. All right, well, I guess I'm not seeing any more questions coming in. All right, Renee, well, thank you. We appreciate the opportunity, and thanks everybody for coming. I hope you guys have a great holiday season. Make sure you practice your trading during the off season. Don't just show up for game time. Make sure you're doing a lot of practicing. If you don't know how to practice your trading, give us a shout. You can always reach us at bunt@theintentionaltrader.com. We got Connor and Lisa there that'll help you. So everybody have a great holiday season, and we hope to talk to you all soon.